What if the dollar system you've trusted your entire life is in its final chapter? Not in some distant future, not in a hypothetical scenario. Right now, today. Because while everyone's focused on interest rates and inflation numbers, the foundation of the dollar system is cracking, and silver is about to tell you exactly what that means. Let me show you what's happening behind the scenes. The dollar has been the world's reserve currency for 80 years, since Bretton Woods, since the petrodollar agreement. The entire global financial system is built on the assumption that the dollar is stable, reliable, and backed by the full faith and credit of the United States. But that assumption is breaking down. The dollar index just crashed below 100. That's not just a technical level. That's a psychological threshold that signals weakness. And in currency markets, weakness breeds more weakness. Foreign central banks are net sellers of U.S. treasuries for the third consecutive year. China has reduced its treasury holdings by $320 billion. Japan is selling to defend the yen. Saudi Arabia is diversifying away from dollars for the first time since the 1970s. The traditional bid for U.S. debt is gone. And that means the Federal Reserve is becoming the buyer of last resort. When the Fed buys treasuries, they're not using money they have. They're creating new money. They're expanding the monetary base. They're inflating the currency. And that's exactly what's happening right now. The Fed's balance sheet is expanding again after 2 years of quantitative tightening. Not because inflation is under control, not because the economy is strong, because the treasury market is breaking, and someone needs to buy the debt. This is the beginning of the dollar's collapse. Not a sudden crash, a slow, grinding devaluation that accelerates over time. And silver is the asset that benefits most when fiat currencies are being destroyed. But here's what most people don't understand about silver's relationship to the dollar. Silver isn't just a hedge against inflation. It's a hedge against the entire dollar system. Because silver has industrial demand that gold doesn't have. And that industrial demand is denominated in dollars. When the dollar weakens, silver becomes cheaper for foreign buyers. Chinese manufacturers, Indian electronics companies, European solar panel producers. They all buy more silver when the dollar falls, and that creates a feedback loop. Dollar weakness drives silver demand. Silver demand drives prices higher. Higher prices attract investment demand. Investment demand puts more pressure on physical supply. Physical supply constraints drive prices even higher. We're at the beginning of that cycle right now. The dollar index below 100 is the trigger, and silver is already responding. Physical silver premiums are at multi-year highs. Delivery times are extending. Vault inventories are declining. All signs that the market is repricing silver for a world where the dollar is no longer the dominant reserve currency. And here's the kicker. The real price of silver, adjusted for dollar devaluation, is probably closer to $200 an ounce than the current spot price of $28. That's not speculation. That's based on the money supply expansion since 1980, when silver last hit its inflation-adjusted peak. If you account for all the dollars that have been created since then, silver should be trading at 10 times its current price. The market is going to figure this out, and when it does, the repricing is going to be violent. Now, here's something most people miss when they think about protecting themselves with precious metals. If you're buying coins or bars, you're protecting maybe a few $1,000s. Maybe 10 or 20,000 if you're really committed. But where's the majority of your wealth? For most Americans, it's in retirement accounts, 401ks, IRAs, accounts that are still denominated entirely in dollars. So you buy some gold eagles or silver rounds. You've got physical metal you can hold. That's great for a portion of your wealth. But what about the 200,000, 300,000, 500,000 sitting in your retirement account? That's still fully exposed to dollar devaluation. And here's what most people don't realize. You can hold physical gold and silver inside your retirement account. It's called a gold IRA. The IRS explicitly allows it. You can roll over existing 401ks or IRAs into an account backed by physical precious metals without triggering taxes or penalties. Think about what that means. Instead of protecting a few $1,000s with bullion purchases, you're protecting your entire retirement at scale. And you're doing it with pre-tax dollars, maintaining all the tax advantages of a traditional retirement account while backing it with hard assets instead of paper currency. I've put together a comprehensive guide that walks through exactly how gold IRAs work, the specific rules and requirements, how to evaluate custodians, and how to structure a precious metals retirement account for maximum protection. It's completely free. Link is in the description below. This is specifically for Americans with at least $100,000 in retirement accounts, because that's the level where this strategy makes the most sense, where you have enough wealth that protecting it at scale becomes critical. The guide covers everything: the rollover process, the types of metals that qualify, the storage requirements, the tax implications, everything you need to make an informed decision about whether this makes sense for your situation. The gold market is telling you something right now. The question is whether you're listening. Your retirement account, your life savings, is denominated in a currency that's being systematically devalued. And by the time it's obvious to everyone, it's too late to protect yourself at reasonable prices. This is why understanding gold IRAs is so critical. It's not about selling you something. It's about education. Understanding your options before you need to make a decision under pressure. Don't be most people. Understand what's happening. Understand your options, and position yourself accordingly. The guide I mentioned is free. The information is there. What you do with it is up to you. But do something, because the gold market just changed, and what comes next is going to reshape the precious metals landscape for the next decade. Are you going to be one of them?